So just about how long will it take to improve your own credit? We're going to talk about a couple variables that you need to know about so you can overcome them in advance as much as possible and set some really good expectations for you so you kind of know just a good idea of roughly how long is it going to take to see some real credit progress. So when we talk about what kind of obstacles could get in the way and make the credit repair process a little bit longer than it really needs to, there's really three main variables that we're going to talk about today. Number one is going to be your personal life. So what you got going on, on your personal side, which I get it, everybody's busy, but not being able to really carve out a good amount of time to give your credit the amount of attention that it really needs. We're going to talk about the repair goals. So when we talk about credit repair or repairing your credit, really we have to define what does repair mean to you. Because for certain people, repair could mean multiple different things. So we're going to talk about that because that does have an influence in terms of when are we done with the repair process. And lastly, we're going to talk about the dispute time. So when you're disputing items on your credit, when you're building credit, certain things take a certain amount of time. So we're going to unpack that a little bit more as well. All right, so first let's unpack repair goals. So the word repair, like I said, could mean a variety of different things. It could be a certain score, so you have a certain number in mind, and maybe it's just kind of like a peace of mind or just a self-accomplishment kind of thing that you reach a certain goal. For some folks, it's going to be that the score allowed them to do something like buy a house or get a really good interest rate on a car or get access to credit lines for their business, things like that. So the term repaired, it's kind of open to the consumer. It's basically dependent on what your individual goals. And so I want to talk about that a little bit more and kind of break down roughly how long it may take to reach a certain score, how long it may take to get a mortgage, a car, things like that. Because when we're talking about how long is it going to take to improve your credit, got to have an end goal in mind and then just kind of reverse engineer it from there. So let's unpack that a little bit more. So let's start off with buying a house. So to buy a house, you're going to need a mortgage. This is basically a loan offered to buy a house. And so mortgage loans have different credit score requirements. Really just depends on the loan. And before we dive into the different types of loans that are out there, it's important to understand what score model that the banks and the lenders are going to be using when it comes to determining if you can qualify for a mortgage loan. And the score model, or version, if you will, that the banks are going to be using is going to be called FICO Mortgage. These are some of the older versions of FICO 2, 4, and 5, and it's a specific score that mortgage lenders use. So it's basically known as FICO Mortgage. And to find out what your FICO mortgage scores are, there's really only one website out there that actually provides mortgage scores, auto scores, FICO 8 and 9 scores. And this company or this website is basically myfico.com. Now, we don't, get a kickback from them, or we don't get any kind of affiliate rewards for recommending. I wish we did, because we do like MyFICO a lot. They're a really good service. But you can go to their website, check them out. It's really, like I said, the only website that I know of, and I could be wrong, but as far as being in the industry for nearly a decade, this is the only website that's out there that I know of that will provide your mortgage scores, auto lender scores, credit card scores, 8 and 9 scores, all your different FICO version scores that you're going to need to obviously know when you get ready to make a major purchase like a house or a car. So that's the score model you're going to want to pay attention to, is your FICO mortgage score when it comes to a house. And the score minimum that most lenders want to see, for the most part, kind of like the baseline is a 580 FICO mortgage score. Most lenders that do loans from 580 to about 619, these are typically going to be like FHA loans or VA loans, maybe even a USDA loan for like rural areas. Usually conventional loans want a higher score requirement, but for your most common FHA, VA, USDA loans, lenders that do mortgages for people that have credit scores below 620, so like 580 to 619, usually they're going to have a stricter debt to income ratio requirement, so you can't have a whole lot of debt. And if you need help with down payments, so if down payments is going to be one of the challenges you may face when it comes to buying a house, usually you don't get any kind of down payment assistance until you get your credit score, much higher than that. Which brings me to the next loan product, which is going to be, lenders that do FHA or VA loans with credit score minimums of 620 FICO mortgage score and above. So 620 mortgage scores can get you in the door for a VA loan, an FHA loan, and even a conventional mortgage depending on the lender. Now, most lenders do fall here. This is kind of what I call the sweet spot for most mortgage lenders. Mortgage lenders would typically want to see at least a 620 FICO mortgage score and above to really be effective and help out the vast majority of people. That's kind of the sweet spot for them. The debt to income ratio requirement can be a little bit higher. A lot of lenders can go up to about 55, maybe 56% on the debt to income ratio, especially for an FHA loan. And then down payment assistance programs typically kick in right around here, 620 and above. If someone is needing some help with some down payment assistance, usually that's the score you want to meet, about 620 or higher. And then if you're looking for a conventional mortgage, maybe it's an investment property, or maybe it's a bigger property, maybe it's a house in the $400,000, $500,000 range, or maybe even higher than that. Usually FHA, has limits. So usually FHA mortgages kind of cap out at about $340,000, $350,000, somewhere in there. And so for a higher price home, you're going to typically need to get a conventional mortgage. And I would say the sweet spot for a conventional, I know I said 620 a little bit earlier, and that typically can get it done, but a lot of lenders that do conventional loans typically want to see about a 680 or higher. And so when it comes down to reverse engineering it, right? What does repaired look like for you if you're trying to get a mortgage? 620 for the most part if you're trying to get an FHA or a VA loan. But if you want to get a very good interest rate on just about any loan when it comes to a mortgage, 680, maybe even 700 and above will pretty much unlock just about every loan program that's available to you. And it's just a matter of, what the down payment options are available and what the debt to income ratio requirement is going to be. But credit score wise, 680 and above is going to be kind of where you want to be. Okay, so now let's talk about auto loans. So if you're repairing credit because you want to get a good interest rate on a vehicle, you want to pay close attention to this. So for auto lenders are typically going to be using the FICO score version or FICO auto score, which is normally going to be anywhere between like a FICO 4 or 5 or maybe even a 9, but there's going to be the tailored industry version, which is known as FICO auto. And there are banks that offer what's called like subprime loans. And so if you ever, bought a car at a dealership and your credit wasn't the greatest, you probably got a subprime loan, probably from a like a secondary financer like Santander or Westlake Financial, maybe another one. And they typically will do loans as low as 500 credit scores. And the interest rate on them may not be the greatest. You're typically looking at, double-digit type of interest rates, anywhere between like 10% on the low side up to about 29% and on the high side. But if you're really wanting to get a very good interest rate on a car payment or on an auto loan, the credit score you want to shoot for is about a 620 FICO auto score. And not only that, but you more than likely want to get with a local credit union. Credit unions are historically going to be the most competitive when it comes to auto loan interest rates. And so not only do you want to make sure your FICO auto score has reached 620 with all three bureaus or better, but you want to make sure you contact a local credit union, get pre-approved for auto financing and use their financing, take their financing with you when you go car shopping. And so, the dealership says, hey, use our lender. Probably try to avoid that because obviously they get a little kickback from using their lenders. So, they may, the interest rate may not be as good compared to what the credit union is offering. So just make sure you take your credit union financing with you. But again, when it comes to repairing your credit, what does the end goal look like? If the end goal is to get a good interest rate on a car, 620 FICO auto score or better, and getting with the credit union is going to really help you accomplish that. All right, now let's talk about lines of credit. So if you're trying to get approved for some credit cards, whether it's personal use or even for your business, if you have a company, there are some credit score, minimums you want to reach before you start applying for some credit cards. Now, there are some subprime credit card companies like Credit One Bank and Capital One that will issue an unsecured credit card if your credit score is typically above like 580. Now, the credit limit's going to be probably on the lower side of things, but you can in fact get approved for an unsecured credit card through one of those institutions or even any other ones that have that deal with low credit scores. But usually what I'm seeing is about 580 and above on the FICO. I'm going to say FICO 8 score, FICO 9 score. Those are the newer versions of FICO, and it's typically what most credit card companies will be using. Then when we're talking about prime credit cards, like, well-known banks, large credit limits, I'm talking about Apple, American Express, which is Apple, by the way, is Goldman Sachs, Chase, Citi, Wells Fargo, etc. The score you want to be shooting for when it comes to these, more well-known banks and higher type of credit limits, usually 680 and above is going to get the job done. So as long as your FICO bank card score or your FICO 8 or 9 score is above 680, you have pretty good chances of getting approved for these larger type of institution credit cards with a decent credit limit as compared to the subprime ones. Doesn't mean there's not any credit card companies that are out there that are doing 640, 660. There are, but in terms of being on the safe side and making sure you get a good approval, a good size limit with a reputable bank, 680 and above, I would say, is going to be the sweet spot when it comes to business credit cards or even just personal credit cards in general. Okay, so we basically unpacked the credit score minimums for mortgages, auto, and credit cards. And so in summary, 680 plus, it should cover pretty much just about every single product when it comes to credit cards, mortgages, and auto loans. Of course, with mortgages and auto, you can go down to 620, FICO mortgage or FICO auto. And when it comes to credit cards, about FICO 8 or 9 score, you want to be 680 plus. So really 680 should be your goal. And now let's kind of take a look at how long could it take you to get to a 620 or to a 680, depending on where you're at. And I've kind of broken this down just based on averages and past experiences. And so I kind of help you project roughly how long it may take to get your current score where it's at to a middle, to a low to mid 600, so you can go and do the things that I'm talking about here. If your repaired goal in mind is to buy a house or get a car or get approved for credit cards. So on average, here's what I see. So consumers who have a credit score in a 500 to a 579 range with zero open revolving credit, like no open credit cards, no lines of credit, just basically zero open revolving credit. I see those consumers, as long as they go through the proper channels of disputing items on their credit report and building credit at the same time, maybe getting like a secured credit card from day one, I'm seeing on average about a 3 to 6 month time frame in order for someone to take their score from like a low to mid 500 to a low to mid 600. Of course, that's all payments being paid on time, the credit card balance being low, and a good amount of progress made on removing any inaccurate, damaging accounts from someone's credit report. Consumers that have a score range from 580 to about 599, also with zero open credit, that time frame can actually be a little bit shorter to reach that low to mid 600 range. In fact, someone with about a 580, 599 score, somewhere in there, with zero open credit as well, if that individual were to get a secured credit card from day one and maybe get a couple items removed from the report that are negative, usually within about a 1 to 3 month time frame, I'm seeing those consumers reach about a low to mid, maybe even a high in some cases, 600 score, which, if you remember earlier, that's usually going to be good enough for a mortgage, an auto, and maybe a couple of credit cards. And then with consumers that have credit scores less than 500, usually there's going to be some evidence of some recent late payment activity. It may be 6 months old or maybe a year old, or it could be fairly recent if it's like a lower 400 score. But there's like a lot of recent late payment activity. That's probably going to be much of a longer process to get to a low to mid 600 credit score. It's probably going to be closer to like a 6 to 12 month kind of time frame, maybe even more like a 9 to 12 month time frame, because your credit needs time to rebuild and heal from all those recent late payments that just occurred. So, because it's so recent, it's going to take some time to kind of bounce back. A lot of people believe that if they had a late payment, but then they paid the account off the following month or started paying on time, that all of a sudden the score is going to go right back up, and it's just not the case. So that kind of gives you an idea. If your scores fall into any of those ranges where you're starting, it's going to take some time, which I'm going to dive into why it takes some time, especially when you're building credit and disputing accounts, because that ties into the time frames that I just mentioned. So now let's talk about disputing, because that's going to take some time. And that ties into how much time is going to be needed to get you to the result. So let's break down the disputing time frame a little bit further and why it takes a while. So when you mail out dispute correspondence to the bureaus, which is Experian, Equifax, and TransUnion, It could take about 3 to 5 days for the mailed correspondence to arrive at each of the facilities, mail receiving, part of the building, and to allow for just USPS mail time. And it could take about a day or two for your dispute to be opened, processed, uploaded, all that good stuff. I give it about a day or two for each bureau to do what they need to do to get the dispute entered in and then forward it over to the right data of furniture there. And then it'll probably from that point take about 28 days to fully investigate and for the investigation to be completed. And then for them to complete the investigation and respond back by mail with the results of the investigation, as well as with an updated credit report, I would say allow another 3 to 5 days for the mail correspondence to arrive back. So you're taking about 30 days for the investigation and about 6 to 10 days for mail delivery. So you're looking at about 36 to about 40 days per dispute cycle to kind of know what happened with the results, with the investigation, and what you need to do next. Now, if you dispute online, it does take the 3 to 5 day mail time, it does take that out of the equation, but you still are going to be at the mercy of the allotted 30-day investigation period that they do have to do a proper investigation and get back to you, the consumer, with the results of their investigation. So doing an online dispute, while it may save some time on the mail back and forth, it will, obviously cut that out of the equation, but you're still going to have to wait about 30 days for that investigation to be done and over with. May not take as long, but, the federal law does give them up to 30 days to be able to investigate the account. So that's kind of what we're looking at on the dispute time. Now let's look into credit building time. And so while you're disputing items on your credit report, you want to be building credit in the process. And so to build credit, it takes some time to get the secured credit card activated, for it to obviously arrive in your mailbox, for you to use it, and then for them to hit their first reporting cycle. So it could be about a good 30 to 45 days until the secured credit card begins to report. And then you do want to have about at least 6 months of reporting history with that secured credit card to really get maximum benefit. And so when you combine that with the dispute cycle, remember, it takes about 30 to about 40 days for your normal dispute cycle. And you don't want to just dispute one item at a time. You want to dispute as many as possible, because doing one at a time can really make the process take a lot longer. You can dispute multiple accounts on your credit report at one time, but not everything is going to get removed right away. Sometimes you may have to go back and forth with the credit bureau, or even with that data furnisher, which would be a debt collector or maybe a creditor. You have to go back and forth with them if they're not really understanding your dispute. So you do want to have a good reason for a dispute. And if it's not removed within the first month, but you still disagree with the outcome, you do believe the account is inaccurate for whatever reason, you do have a right as a consumer to request a reinvestigation. You just have to state your claim as to why you still believe it is inaccurate, or why the investigation was why it was not done correctly in your opinion. And so you want to plan on going kind of back and forth here with the reporting agencies and with the debt collectors. I would say kind of count on a good 3 to 6 months of going back and forth and dealing with the reporting agencies and the bureau. So when you combine the dispute process, when you combine credit building strategies, a good 3 to 6 months time frame is really what you're going to be looking at. Again, you kind of have that along with the score minimums. So maybe it's kind of what comes first. If that score that we talked about comes first, while you're going through the dispute process and credit building process, then maybe it won't take 3 to 6 months. Maybe it won't take 6 months. Maybe you hit that sooner. And it's kind of hard for me to engage with you personally, because every credit report is different. I'm really just speaking from a general point of view of, in my opinion and past experiences, what do I typically see. So now we talked about the dispute process. We talked about the score requirement and roughly how long it may take to meet certain score minimums. Let's talk about the last thing that could get in the way and could maybe make the process a little bit longer than it needs to be, which is really going to be your personal life. So when it comes to your personal life, this is where it can be a little tricky. This is where discipline has to really set in, because when it comes to repairing your own credit, you really have to be on top of the process. So what I mean by that is making sure you're getting your dispute letters out on time, not waiting on it, not sitting on things, getting them out the door to the bureaus or to the debt collectors agency, getting that done as fast as possible. Also being on top of when the bureaus respond back, because when they respond back or when the debt collector responds back, you want to obviously stay on top of it. You want to read what their response is, you want to notate what the outcomes are, and you want to have your response ready to go depending on what needs to get done. And a helpful thing I would say is you don't have to like change your entire life to, just become a credit expert or be on top of your credit. If you just carve out a good 30 minutes once per month, maybe you're super busy during the week. Maybe, you got work, you got kids, a lot of things going on during the week, and you don't have a lot of time to dedicate to your credit, on a weekly basis. But maybe carving out a good 30 minutes on a weekend, and just kind of maybe at the end of every month, right, depending on when you start your repair process. But just carving out a good 30 minutes, opening up all your mail, looking at all the responses, looking at an updated credit report, and basically figuring out what your response should be to certain things. A good 30 minutes once per month should take care of it. You don't really need to spend hours or an entire day on it. A good 30 minutes of undivided attention, on your credit report and on the result is really going to help you stay on top of it and to ensure that things are continuing to move forward with you and really combat any potential procrastination that may set in. So as long as you don't procrastinate and you really discipline yourself to take a look at your credit report, take a look at the responses, at least once per month for about 30 minutes, this process could go pretty normal for you. By normal meaning 3 months, 6 months, maybe even 9 months tops, if depending on where you're starting and what your score end goal is. But a good 3 to 9 months, a lot can be accomplished for you credit score wise to where, you're in a better position. You've done what you can to improve your credit. And if you're building credit in the process as well, that's really going to help it as well. So as long as you're on top of it, if you're repairing it on your own and not procrastinating, not letting things go too long, you should see some pretty good progress. And you don't have to wait even 3 months to see the beginning stages of progress. You'll see progress your first month, second month, but in terms of seeing really good enough progress to be able to go and do things like buy a house, get a good interest rate on a car, get approved for credit cards, anywhere between 3 and possibly 9 months, somewhere right in there, you should be able to go and do those things. Okay, guys, well, that is my time today. I hope you enjoyed today's video. If you found it helpful, give me a big thumbs up. And also, if you are in the process of wanting to repair your credit, don't forget that I do have a do-it-yourself credit score blueprint course that just, tons of videos, a lot of dispute letter templates just to kind of help you get on track as fast as possible. Completely, can do that on your own. It's only $97. You can check out the link in my bio or in the description below to, learn more about the course. Other than that, don't forget to subscribe. So when I drop a new video, you're one of the first ones to know of any new credit content that gets released. And again, guys, I'm Joe Chavarria. I'll see you guys next time.